Hello and welcome to this Forex Preview at XM.com. We'll be discussing the RBA's upcoming policy decision and the potential reaction in the Australian dollar. I'm Maria Pachurdes, and joining me is Senior Investment Analyst Haralambos Pissouros. So Haralambos, back in June, the RBA hiked by 25 basis points. What's the economic situation in Australia like at the moment? And do you think the RBA is likely to hike for a third time in a row when it meets on Tuesday?
Hello, Maria. Yes, indeed, the RBA caught the market off guard last time. It was the second time in a row that did that and hiked rates by 25 basis points. Since then, we got data suggesting, in my opinion, that officials could take the sidelines at this gathering. Just to explain, the GDP data showed that the economy slowed by more than expected in the first quarter. And although both the manufacturing and services PMIs for May came in better than expected, still the manufacturing index stayed in contractionary territory, and the services one slid to slightly above the 50 stagnation mark. What's more, although the unemployment rate ticked down to 3.6% from 3.7%, the monthly year-over-year CPI rate for May fell notably to 5.6% from 6.8%. And also retail sales for the same month saw their slowest annual increase since September 2021. So with all that in mind, I believe that officials could take the sidelines at this gathering and wait for August before proceeding with another hike. In other words, I believe that they have the luxury to wait for more data to see whether past hikes could still weigh on price pressures.
So if policymakers do decide to wait until August to hike again, what reaction might we see in the Aussie?
Now, to get an idea on how the Aussie may respond to the outcome of this gathering, we first need to see what the market is pricing in for the meeting, for the decision. Investors are pricing in 2 more quarter-point hikes by the RBA, but for this gathering, they are assigning only a 37% probability for a hike, with the remaining 63% pointing to no action at all. So, if officials decide to take the sidelines, the Aussie could fall, but not much, especially if policymakers clearly telegraph an August hike. For the currency to fall sharply, policymakers may need to take the sidelines and adopt a softer language than they did in June. But taking into account that inflation in Australia remains well above the upper bound of the RBA's 2 to 3% target range, I believe that a dovish outcome is very unlikely. Now, in case the RBA decides to surprise the markets for the third straight time, and hikes rates by 25 basis points, the Aussie could rally. And at this point, I would like to say that the risks surrounding the reaction are asymmetrical. In other words, a potential rally due to a hike could be larger than a potential slide due to a hawkish pause. And that's because the Aussie fell 4.5% against its US counterpart the last couple of weeks, and also because the market is pricing in, is already pricing in a higher probability for a pause rather than a hike. So it will be a surprise. The market will be caught off guard, and a potential rally due to a hike, yes, could be larger than a potential slide due to a pause.
Haralambos, thanks so much. And thanks for joining us at XM.com.